Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been another huge week. We've got so much macro news to get through as well as all the crypto news. We do welcome a few hundred new subscribers again this week, so thanks for joining us on our journey as we go down that rabbit hole. And I mean, we're halfway through this year, and if you had have guessed that these were going to be the most spoken about terms and constantly in the headlines, I mean, who would have thought it? But here we are. We're doing our best to navigate these waters, learn as much as we can, and come out the other side as best we can financially, as well as health-wise, I guess. So I do want to welcome 83 members into our premium area also. Crazy to think that we were a little above 1,000 a year ago when things were looking dire and crypto had been going sort of lower for 2 years. And I guess we kept the faith. A big thank you to 1,000 of you that have been with us for over 3 years now since we started the group, and really crazy to think that we are at that 2,000 number now. So look, with the number of new investors coming into the group, I'd really encourage you to make sure you check out my cheat sheet, that list of what I look for trading or investing, as well as the price discovery pyramid, understanding value. So these are some really important concepts no matter what type of investing or trading you're doing. Put these along with the investment reports that we are doing, the 5 fundamental analysis. So this week we've got another one of those reports out covering 5 cryptos, as well as our gold and silver report out as well. And when we get messages like this, I guess it makes it all worth it. So thank you, Joel. Synthetics was one that we covered very early on for all our members. Back here at 4 cents and over $2 this week for synthetics. So that is a 5,000% return. Joel was just one of many people who didn't necessarily catch the bottom, but got in at 14 cents. That's over 1,000% return. And we've had about half a dozen of these this year. So all those fundamentals, along with technical analysis and market psychology, it's all coming together really well. And we want to help you try and get to your goals. And in times like these, I think everyone would love that little escape, and that's why I do love being down here in Tassie, I guess. So something that I'm building towards, off the grid, deep in the bush, sustainable living. I really think that is the end goal for a lot of people that want to get away from that 9 to 5 grind. But let's get into it. So tourism has taken a hit in Australia. That's $60 billion industry. A lot of those flights no longer coming in, Airbnbs, they're the sort of things that have really been hit hard. And now we've got more suburbs of Australia in lockdown. So this is kind of the second wave, whereas other countries are still really on that first wave. So more towers in lockdown in Victoria, in Melbourne today. And because of that, we've seen these huge surges in all the rental listings. Rents are heading in the opposite direction, so that's good if you are a renter, but it's all these Airbnbs. You guys know the story, and we'll cover this in more detail with Martin this week. And because of the oversupply now, people are less likely to build. So we've got those building approvals have taken a big hit, down 83% year over year in these other states and territories, but down across the board, particularly New South Wales there, which has been one of the states with the most apartments coming online. So this was an article on Mortgage Business, but what they're suggesting here, Morgan Stanley, the big bank, is that there's going to be more stimulus. It's the first thing that our politicians go to every time, so I guess expect more of it. And they're already floating ideas like abolishing stamp duty because they're no longer making all that money, particularly the state governments, and lifting the GST. So again, what does that do? Well, it's probably going to lift house prices, and who owns the houses? Well, I guess a lot of people do, but it's the people with a lot of wealth that have the most houses. And if you push the GST, again, that's affecting more people. So I think this is the sort of debates we're going to have ongoing in a lot of countries, because you've got to get that money from somewhere unless you start to go down the path of modern monetary theory, which we'll get into a little bit later as well. So the coronavirus downturn, it's hit the banks. That's going to hit your superannuation. You guys know the story in Australia where we've got that construction, housing, the banks, they make up a huge percentage of our stock market compared to other indices around the world. And we have seen a lot of money already pulled out of superannuation. Now, that's where a lot of that consumer spending, we saw that big jump last week. A lot of that was straight from that $17 billion that got pulled out of our supers. Now, some people have spent that on all sorts of things, even investing in gold and silver or crypto, gambling. But either way, that explains the big uptick we saw in consumer spending last month. Now, some economists are saying that we can't keep JobKeeper. It's too expensive and we don't want to just keep increasing Australia's debt. It's got to be paid back someday. Whereas the RBA themselves, the central bank, are coming out and saying, well, it's going to be a big problem if you're trying to end this stimulus. The jobs recovery is going to be slow. And these are the sort of messages where the tune has really changed compared to what we were hearing about building a bridge and everything would be okay in a few months. And that's where I think the central banks around the world are sounding alarm bells. And remember, they're the ones that always say things are going to get better, whereas they're actually warning that this is going to take years now. We've got 1.4 million people relying on food charities in Australia as the recession bites. So look, if you tell someone they can't work, regardless of what you believe about COVID, you've got to look after them and keep that income coming in so they can at least put food on the table and a roof over their head. That's just my opinion. And I think that they're the sort of things that aren't going to cause inflation. And that's the big worry at the end of the day if governments start to spend too much. It's not so much the debt. It's about, well, these people were already getting paid that much and you keep giving them that much money. Does that really change anything in the broader scheme of the economy? Now, China's raised some tariffs on Australian beef. This is going to hit not just the farmers, but every stage along that supply chain as well. Our politicians are saying that this is not related to the recent tensions and everything we've seen in the headlines. But then at the same token, we came out and see $270 billion pledged over the next 10 years for larger military. It's going to be a poorer, more dangerous world at the other side of this and the rise of China. So interesting words there from our leaders. Talk about a love triangle. We've got China buying some more of these agricultural products from the US. Now, they're a long way from hitting the trade deal levels that were promised. But when people talk about the ownership and China buying everything in Australia, these stats certainly surprise me a little bit. So you see things like US ownership over Australia's biggest companies. This is a lot of the stock, but I've seen some great charts. The guys over at Robbie and the other Australian guys, I'll think of their name in a second, and you guys can post the link down below. They did a video today covering Chinese ownership versus American and other countries, and it really is quite low in terms of that theory that China is just coming and buying everything. The data actually doesn't suggest that, and the US own a lot more. So the US Navy have sent 2 aircraft carriers for these drills in the South China Sea, and we've actually got some Chinese warships there already. So this is the sort of the tensions with the trade war, the COVID, the war of words, Trump on Twitter, and now Australia's kind of been dragged into all that as well. And now we've got China looking to form their own sort of OPEC, their own oil cartel, and they're the biggest exporter of oil now, biggest importer, as their economy grows. And this is the petrodollar. This is what gave America so much power, and China, again, another thing that is just looking to take power away from that US hegemony. And finally here, US, I guess this is good to do if you can print up money and the rest of the world wants to accept it. The US have monopolized COVID treatments and bought up 3 months supply of remdesivir, which is the most promising treatment for COVID at the moment. In terms of those mobility trends, we see which countries are out and about again. The US has really surpassed that baseline, and people are getting out and about. And that's where these stats that we're going to get into now are worrying a lot of people, because we have seen this uptick in a number of states. So the US only has 4% of the world's population, but 25% of the coronavirus cases at the moment. And what they're finding in these tests, now I know the comments always light up. Some people don't believe COVID exists, and some people believe it's worse than what it is. I'm trying to stay in the middle here and try and base it on as much data as I can. And what we have found now, that there is a mutation which might make it slightly more dangerous, but in the overall scheme of things, that's not the real worry. The worry is that people just aren't taking it seriously still, and people are out there not wearing masks and not washing their hands. And now we're seeing these numbers starting to flow through. So people are saying, well, look at look at the deaths. The deaths aren't that high, and we're just doing more testing. That's where these numbers are coming from. But remember, this takes a few weeks to all flow through, and what we've seen is an uptick in hospitalizations. So in the next few weeks, we're really going to find out whether there's something to be worried about or not. And if we see a big uptick in deaths and hospitals in a number of states in America, for example, to get overwhelmed with ICUs, then I don't really see how people can argue that this isn't real, because at the moment, the reality is that the hospitals aren't overflowing like they were in New York. So the next few weeks are going to be very telling indeed. And that's why we see Dr. Fauci coming out and maybe scaring people a bit, but I guess trying to scare those people to take it seriously that aren't, because there's a growing number of people in America and in Australia that just don't think this is real at all. Okay, so into the economy, we've got 4.8 million jobs in June, smashing expectations. Unemployment fell to 11%. The Bureau of Labour Statistics did admit that their data isn't as accurate and don't take it month to month as a given. So it's surprising to hear them say that. You can see the jobs added by industry, and when we've got the big uptick in leisure and hospitality, retail, trade, they're the sort of things that are being shut down again first if the second wave comes. So just something to be mindful of. This was an article by Wall Street, just repeating what I said before. Never seen so much fake unemployment data and jobs data. We saw these numbers just not matching up in terms of who's unemployed versus who's getting unemployment benefits. So look, something is awry there. And as always, it's probably the statisticians that have got it wrong. Now, the US is facing that cliff with all the unemployment benefits looking to end, just like we've spoken about in the headlines in Australia. Trump did sign a 5-week extension for the PPP, which is just one of many programs, and that's where I think they're going to have to extend a lot of them. So this is the Small Business Paycheck Protection Program, but a lot of these businesses, I just don't think they are going to survive if we have another wave and they have to go back into lockdown for another 1, 2, 3 months. So this is why we've seen the US savings rate skyrocket from 6.5% a couple of years ago. It's up to 30% at the moment. People know that they probably don't have a job, or there's more uncertainty about their income, and so that's where they're knuckling down. And this goes against everything in every economics textbook where they tell you that dropping interest rates gets people to spend money. Well, the opposite's happening, and that's why central banks don't understand what's going on. So a lot of these auto manufacturers, they've seen a big down tick, 30% in their sales. So no real surprises there. We've been talking about Carmageddon since before COVID. But what really surprised me here is companies like AT&T and Apple continuing to shut down stores, but they were some of the ones that got the most money, with the Fed buying bonds off them directly. So cutting staff, but at the same time getting more money and stimulus in. Nearly half the US population is without a job, so that shows you how far the labour market has to go. And when you think about all the benefits, there's no possible way that no matter what percentage of tax you collect off people, you can never pay out benefits if there's less than half the people actually have a job. So the Fed's printing all this money to buy Apple corporate bonds. They've got $100 billion on their balance sheet. Why do they need the Fed to print money and give them money? There's 100 million citizens on the government support, 100,000 small businesses that are set to close in America. They've already got those 100 trillion in unfunded liabilities. So this is the confidence game where we're starting to see the US dollar weaken, and we're now waiting to see if it's going to be the cleanest dirty shirt in the laundry or not. So the Fed did reveal a sneak peek of a few companies that got money from their corporate bond program, but obviously not everyone. The government's still keeping those cards close to their chest. But either way, this all plays into the theme of inequality, and we can see that the US is a real outlier here when we actually have a look at that sort of line of best fit from all these different countries. The share of middle class income, the US is one of the worst, and that's why we see people taking to the streets. And this is all closely tied, permanent job losses, to the equity markets. And when we see a big fall off a cliff in terms of jobs and stock markets at record highs, that's purely a symptom of the Fed or the money they've printed. So look, they've highlighted the importance of curbing the virus, the rebound here. Powell's talking about all these different reasons to worry about the economy, just like we had in Australia at the start of the episode. And that's just one headache. I mean, think about the ECB. They've got all these fracturings and countries that don't even want to let them do QE because they think it's not fair. These different bond buying programs to worry about. So they've got a massive, massive problem. This is where you get into the US dollar strength if all these other countries are going to have more on their plate. The other thing I just wanted to mention was the Fed stress test. So these happened a week or two ago, and since then we've had things like the Reserve Ratios Acts, the Volcker rule cut out. So now big banks can speculate on derivatives and not even hold reserves. So imagine being able to go on your exchange and margin trade and not even have to have any reserves. And if anything goes wrong, you basically know that the Fed are going to bail you out, or the government. I mean, this is the crazy stuff that's happening at the moment. Printing all this money, buying mortgage-backed securities, the repo market, they told us that this was just temporary. Now they're buying the corporate bonds, junk bond ETFs, finally banning dividends and looking to stop the buybacks. If you're going to keep printing and giving money out, at least do that. And what comes next is negative interest rates, buying stocks directly, and then yield curve control, where they basically just say, we're going to pin rates low and we're just going to buy as many bonds as we need to. And that's what they're kind of experimenting with in Australia at the moment. As you can see in this chart, this just shows how quickly the Fed put the foot to the floor. So $2.5 trillion in 16 weeks versus the slope there of the other QE programs. This is the different programs that they have implemented, these special purpose vehicles. So the Fed can't actually buy these bonds directly, so they need someone else to do it. And this is probably the better visual representation here, where you can see that the red dot basically hasn't been any uptake in most of these programs. So things like Main Street Lending Program, there's basically been none. So the small businesses aren't getting out there and taking advantage of it. This is just money that's been printed and is sitting in the banks as reserves. So here you can see the Fed limit. So they're saying, look, we're ready to give you $800 billion, but so far the markets have just front run this and said, well, the Fed's got our back. They've just rushed in, and that's why we've seen this huge rally in a lot of areas. Now, we do know that in the latest data that the Fed have been buying bonds off certain companies like Apple that we spoke about before. But this data here just shows us that some of these programs haven't been taken up at all. Again, this is another good data showing us the productivity of the average worker versus the hourly compensation. So back when we went off the gold standard, all of a sudden, you work more, you work harder, you're more productive, but because of the way that money works in fractional reserve lending, the Fed, the Cantillon effect, it all just rolls into the way that our debt-based financial system works, that results in the guy at the bottom of the food chain not really keeping up with the cost of living, inflation, even though they are actually more productive. So Andrew Yang has been talking about universal basic income. This is becoming more and more of a reality in a lot of countries around the world, but he's now saying to Congress, look, this is what you can do to avoid a Great Depression, and I think this is going to play out. It is going to happen. It's just a matter of what form. And we've got the wealthy guys also backing this statement up. This is kleptocracy. The rich know that they can get away with anything these days. He's sort of saying here, Chamath, who is a legend if you haven't watched his interviews, why on earth are the Fed buying foreign companies' bonds? Like, we're making corporations from other countries, CEOs wealthier? Like, this is just nuts. When did this become their mandate? Ray Dalio also saying that capital markets are no longer free. The Fed is basically just buying everything. They are the backstop for everything now. The Fed are a top 5 holder of the top 5 ETFs, corporate bond ETFs in the US now. Number 3 in terms of the liquid ETF, which we've spoken about a few times and have actually spoken about a few trades here as well. One of the things we mentioned near the bottom here was, look careful if you're going to short these junk bonds, because fundamentals don't matter when the Fed just steps in and buys everything. Here we can see the hedge funds that have slashed their short positions. So during this big rally here, this is the red. You can see that how quickly that has decreased. So they've just had to say, you know what, we don't really think this is a dead cat bounce any longer. It's going to roll over. We've actually slashed our short positions because of how much money the Fed's printed. Now, with all this happening, I still think that it's not really a true indication or fair value. Now, who knows how long this parallel universe can continue, but this is the liquidity index. And what you can see here is the sort of the depth of the market. When you compare it to a few years ago, look at how illiquid these markets got here. The S&P 500, this is meant to be one of the most traded markets in the world, the E-mini futures, and there's just no liquidity there. So very small orders, and possibly even retail investors on Robinhood that are just coming in and buying these indexes. Maybe that's enough to push the market up. So we just got to be mindful that this is maybe not real, true, indicative, high volume trading like a genuine bull market. So Amazon continues to just expand. I mean, we'll get to some news about Jeff Bezos later, but $1.4 trillion, it's bigger than the next, is it the next 13 companies put together? I mean, these are just crazy, crazy numbers. Tesla surpassed Toyota. We mentioned that last week. Now, they did actually beat their sales numbers, and they also have moved some of these Cybertruck reservations. They've started taking them in China now as well. So, look, do you think Tesla deserves to be $1,000 a share and higher and more valued than Toyota, which is one of the far bigger automakers in America? The other stocks that are killing it at the moment are the FANG stocks, or there's a few different ways that you can slice it there if you put in Apple or Alphabet or Netflix, but it's these tech stocks where they're facing a lot of criminal probes. The Facebook boycott is in full swing with a number of companies saying we're not advertising on Facebook. You guys know that we're actually this week, if you're in the group, you'll see an announcement about the first stages of launching our new platform and new app. So look, people are moving away from Facebook. The FANG fortress is rattled, and Facebook is just one example of the companies that are taking hits, and people are mindful of privacy. And this is the other big theme that's going to come out of all of this COVID stuff: trust in the government, trust in media. And this is a bill that got passed to microchip humans to protect their privacy. I mean, this is conspiracy stuff from 10 years ago. I clearly remember watching these videos at the time when I was at uni and watching a few of those conspiracy type videos. And the message was, they're going to tell you that this is good for you. They're going to make you want to get these sort of chips, and call it what you want, call it tinfoil. But here we are with these headlines, a reality today. The EU, they've got their vaccination passport. So this stuff is happening. All right, so amongst all of this, we do have companies raising their earnings outlooks. So this is the kind of thing that I guess drives algorithms. You do need to be careful though. You know, just like the ratings agencies raise ratings once we'd already had the bounce. Look, are they doing the wrong thing at the wrong time? This all comes back to whether or not we are going to have the second wave. I mean, it's one thing to say, yeah, my earnings are going to go up. It's like the Fed saying, yeah, rates are going to go up. Like, does it actually happen? That's what we're waiting to see. Now, if we look at the smart money, we can see that the funds have actually been flowing out again. So this is fixed income equities. They've really slowed down after the huge withdrawal out of markets. Then we had a lot go back in, particularly fixed income, people wanting to get the bonds and the corporate bonds. And now it's just tipped negative again. So people are being a little bit cautious here. This is it broken down into more detail into its components. So we've seen the blue here, US equities, less money going in there. Precious metals has increased its chunk, and high yield debt, investment grade debt. They're the sort of riskier things where people can see more of a yield. They think the Fed's got their back. This is where money is going into. That's the latest data there. Now, the backdrop to all this as well is obviously the election that's coming up. I couldn't believe the other day I was talking about FTX, the exchange where I do my trading, has a prediction market index, and Trump has fallen from 65% down to 45%, and Biden's gone from 3% to 55%. He's the favorite. And he's actually openly coming out and saying, I'm going to get rid of most of Trump's tax cuts, and a lot of you aren't going to like that. So, look, rubbing up the powers that be and rubbing up the rich is never the way to get elected in America. Or am I wrong? Do you think that the average guy on the street is so sick of what's going on that he wants to see that happen? Either way, if that gets through, that is bad for the stock market. It's bad for companies if they're going to be paying more tax. As Jesse Felder says here, that would take about 12% off the 2021 earnings per share. predictions and forecasts that we've got at the moment, and he is favourite. So I'm really looking forward to reading our US viewers' thoughts about all that down below. Here we can see global debt versus global bond yields. So the debt has just spiked, 280% of GDP now, global debt that has to be paid back. Aggregate yields, they're lower than ever. They're negative in a lot of countries still. So this is Powell's fantasy, where he's talking about raising rates in the future, and modern monetary theory is all well and good until faced with reality. So this is what I wanted to get to. You guys have seen my pinned tweet on Twitter, the purchasing power of the dollar. It just goes down and down and down. And here we get to things like the deficit. So look at how your economy is growing compared to the debt. And it's very clear now the orange line in the debt has gone horizontal, and that's growing way faster. And they've had to do that since 2008, and that was a little blip. So what you're kind of seeing is the gap between the bang for your buck. How much debt and money do you need to print to actually get a little bit of growth? And this is a great chart here. So this is debt-free real GDP growth. So how much GDP growth are you actually getting if you didn't have any debt? So this is real GDP here, measured in 2009 dollars. But this is if you didn't have all that debt. This is what your GDP would be doing. And it's just absolutely tanked here. We're talking 50, that's measured in billions. So is that $50 trillion total GDP shrinkage there? These are crazy, crazy numbers. And what that tells you is that next year it's going to have to be 100 trillion. A couple of years after that, what's the bailout? What's the stimulus going to be? A quadrillion, 1,000 trillion? And that's just to get that tiny little bit of growth. So this is why the debt-based system, compound interest, it just doesn't work. And mathematically, the system's coming to an end. I did a big write-up for members about that this week. So the Fed hasn't bought any assets. They've actually unwind and let some assets run off their balance sheet in the past 3 weeks. And they're absolutely kidding themselves. The bond market is telling them that, no, you're wrong. That has the yield curve still inverted. US real interest rates, the real yield curve, it's still negative 5 years out. So the bond market money, the smartest money in the world, is telling you that things are bad. Things are looking bad 5 years out. We don't believe the Fed. So look, it's not just in the US. Around Europe, we've got negative interest rates. The Bank of France is now talking about corporate debt and fretting. So maybe they've got a lot of this nasty stuff on their books that they are worried about. But when we look at the number of delinquencies, these are corporate mortgage-backed securities. So all that corporate real estate in the middle of these CBDs marked as 30 days plus delinquent. That's jumped from 2% in April to 10% now that are falling behind on their payments. And who's going to get hit when all these CLOs blow up? If you watch the video we did on Friday, the monster whiteboard session, that was half an hour long, that has now got timestamps. This is what we're talking about. Where is the money flowing? Who's it bailing out? Who's it making rich? And why can't it get into the real economy? So if you haven't watched that whiteboard video, I highly recommend it. The Fed know this is coming. We've seen these sharp rise in bankruptcies. It's rising at the fastest pace since the GFC. And this is not just the commodity sector. Marin and I did discuss this in detail about what is going on here. Check out the monthly commodities report if you haven't watched that already. And he's talking about just connecting all these dots. So this is the Fed's dot plot graph, where all the central bankers are saying that rates are going to stay pretty low through next year and the year after. But guess what? Longer term, things are great. Everything's going back to normal. 2 to 3% growth. Just like they always say it's going to happen next year. Well, now they're actually saying it's going to be 3 years out. So that is a huge worry. Not only that, we've got the bankruptcy numbers that we've touched on. The velocity of money is down. So no matter how much they print, it's just not getting into the economy. Total US debt, that dollar for dollar bang for your buck that we're talking about. And that's why I think the stock market and all these different asset classes, it is just a different paradigm going forward from now on. It's no surprise that we've seen a rush to US 30-year bonds. It's the last place you can get some yield, apart from maybe the DeFi space, but that comes with its own risks. Then we've got gold. in terms of the actual indexes, the GDXs, this has been one of the best performance year to date. So I think that's up 40 or 50% if you actually have a look in the past 3 months, from $25 to $37 there. These are the sort of things that we've been watching closely, and you've done really well if you have got some GDX or GDXJ there. It's also the central banks, they continue to buy gold. It's that perfect storm, and it's no wonder that we've got this huge demand for physical holdings, and we're hearing these stories like, once again, fake bars, 83 tons of fake gold bars found in China, a huge counterfeiting scandal. Maduro in Venezuela can't get their gold back, so $1 billion is the High Court has ruled that you can't get your gold back. So is this because there's actually a shortage? I mean, what an interesting time to be alive, guys. I just can't believe sometimes when I sit here and read these headlines out for you. But let's get into the crypto news. So I just want to start off by saying thanks to everyone that tuned in to Real Vision. That was awesome. All those videos are going to be, I think, public in the coming weeks. But that was probably, I guess, a big break for me to get on that world stage and talk about DeFi and a few other things I love with some big names there. Australian news. So the ASX has again delayed their move to putting the stock exchange on a blockchain. They've kicked the can down the road 2 or 3 times now. And a big congrats to one of my friends, Steve Vallis, who's been appointed the new CEO of Blockchain Australia, helping the industry. So as you guys know, I was on the board for 2 years there. One of the things we did was work closely with regulators, and I'm really passionate about shutting down these crypto Ponzi schemes because it gives crypto a bad name. And look, some of these people are finally being caught up with. So one coin operator fined. He was promoting this, and I do hope, and they have the names of the people that are promoting these things, and a lot of people that I tried to warn that just didn't listen. So look, hopefully that is coming for them soon. Another story which should worry a lot of people is that, look, authorities have taken down this big criminal syndicate, but they actually use the backdoors into these encrypted chat apps. So this is what Australia has the encryption bill law for. And where does this end? So even anything that you use that you think is private or encrypted, are the governments and authorities monitoring that? And I think that's just another reason we're going to see a big move to these decentralized companies, so you can actually have your privacy if you want it. The police are said to have obtained a crypto OTC trader in China. So look, there's all these sort of China bans Bitcoin headlines again, whether or not he was just a trader and an OTC to do with Bitfinex or not. Look, I don't think it's a big deal. I don't think China are banning Bitcoin again anytime soon. But these are the sort of stories we need to worry about. The Wirecard fraud. So how does a company like this get audited by Ernst & Young for years, and they've just got a few $1 billion missing? Now, this initially hurt the crypto card companies, but I think since they've had the cards reinstated, they're working again. But this is just nuts that stuff like this can happen. And they're worried about banning cash, or they're worrying about fraud from the use of cash, where we've got all this fraud with a company that doesn't even have, it's completely digital and online. So, in terms of privacy and moving to crypto, we're seeing ongoing censorship. So Stefan Molyneux, he is someone who I watched a lot of videos of back in the day. He got $100,000 in crypto donations after his channel got taken down, and he had, I think, a couple of million subscribers or millions of views on his videos. And look, one by one, we're sort of starting to hit that escape velocity on the S-curve in terms of people that are getting off these different platforms. TikTok may be snooping on Bitcoin addresses and other data. So these apps, TikTok is a Chinese app, I believe, but these apps that just, you click OK when you sign up, it says, do you have permission for this, that, and the other? And they're looking at things like Bitcoin addresses or apps and anything you put onto your clipboard. Maybe it's passwords. So it's nuts that this stuff is happening, and privacy and data is a massive issue. Definity have launched their own crypto version of TikTok, which is very cool and doesn't snoop on your data. So this is exactly what we're going to see. Voice, EOS have finally launched their platform. So this is meant to be like a decentralized sort of social media platform that is open for the public. If you do want to sign up now and check that out, you will need to actually KYC, I believe. And YouTube, Reddit as well, just taking down all these different subreddits and channels that they promote. They say, the old hateful content, but they're playing God, I guess, aren't they? They're choosing what content lives and what content dies. So it's not heading in a good direction, and it's great that we've got these alternatives. In terms of global finance, we've got Switzerland moving to encourage businesses to come there. This is the sort of thing where nobody wants to be first, but nobody wants to be last. And the Senate Banking Committee keep dragging their heels. They had this big hearing about the digital dollar, but it's just already happening. Companies are shunning these sort of regions where there's no regulatory clarity, or they're worried about getting a tap on the shoulder. And companies like Circle, Tether, DAI, these stable coins are just blowing up in market cap. Forget the digital dollar. It is going to be surpassed by these other companies. Brazil wound back its ban on the WhatsApp payments that have been rolled out by Facebook as well, so that's good to see. Sri Lankan Central Bank shortlisting some blockchains for their proof of concept coin they want to launch. Another little company I hadn't heard of until today, so this is Public Mint. They have also launched with 200 banks on board, apparently. So this is a DeFi-like open finance application. Bank of Japan experimenting with a digital yen. And not only that, we've now got the Argentinian peso is reached parity with 1 Satoshi, which is the smallest denomination of Bitcoin. So you know that Bitcoin has 8 decimal places, or 100 million sats or Satoshis. And one by one, we're going to see these currencies around the world lose value, and 1 cent is going to equal 1 Satoshi. So that is pretty cool stuff there, unless you're living in the region where it's devastating. So again, last 10 days, Lebanese pound falls 50%. Another currency that's worth 1 Satoshi. Lithuania, they're raising $500,000 to issue some blockchain collectors tokens. These countries that have just got nothing to lose, why not? Now, these non-fungible tokens, they continue to grow. So we've spoken a lot about DeFi, but these gaming sectors, these collectibles, non-fungible tokens, they're also gathering a bit of momentum, which is great to see. Zimbabwe, this article was meant to be before the previous one there, but this is just another example of a country that is using totalitarian capital controls to ban mobile payments. So we're seeing the numbers on local Bitcoins and similar exchanges really grow, because things like this keep happening, where they just say you can't use digital payments. It's their fault our currency's weak. I mean, what a load of nonsense. All right, so into the crypto news now. We've got Shelley mainnet being launched. They open sourced the code. This is the first step. We also saw a $20 million fund from IOHK for Cardano startups, which is very cool. We had news at the summit that Coinbase will be listing Cardano, particularly for staking purposes. That is what we want later on. So Coinbase custody, we want people to be able to stake. Hopefully it's so easy that you can do it yourself on your own computer, on your own wallet. But everyone always cheers when Coinbase add the ability for the beginners to do this as well. Now, someone said I don't talk about Cardano a lot. That's not true. Remember, guys, YouTube is only one aspect of what we do. So much of what we do is in the group these days. And we've been talking about Cardano for years on the channel. And particularly a few months ago, I said, look, I think Cardano is going to play catch up. Look, a lot of these coins have been running hot. This one's still down 95%. This turned out to be another fantastic trade, 800%. And Cardano did hit 10 cents recently. Look, I think it might be close to a temporary top, but look, you just always got to be cautious. When these coins pump 1,000% in 3 months, let them have a breather. That's really healthy. So Cardano continue back. Remember, all-time high was above $1. So if things get going, if we get in a bull market, it's got a long way to go from 10 cents. IOTA have also launched another testnet. So this is Poland, the first stage of removing the coordinated node. IOTA, another coin that's down 95% still, and I think it's a little bit unloved. I do think it's going to play catch up there as well. Tezos have looked to launch small privacy and payment channels on their blockchain. So these are the chains that are out there and doing things. That's what I really like to see. I know I love Ethereum, but I'm certainly open-minded, and I do even own a lot of these other coins. You guys in the group know my portfolio includes some of these. And I don't own things like Tron that's so busy and more worried about marketing, or Binance have moved $300 million of Tether back to Ethereum even though the gas fees are high from Tron. Does that tell you something about how unusable Tron is, or how there's no liquidity over there even though they tell you there's all these apps and users? Now, forgetting all that, Tron doesn't really care because they're out there getting their logo added to Twitter because Binance did, and his mates with CZ, these sort of things happen. So look, I'm not interested in investing in a coin that's more worried about its logo on Twitter than actually getting the one use case it would probably be good at taken away from it by one of its best friends. So let's just leave it at that. MetaMask has unveiled more updates, some privacy features in the wallet, really cool stuff. So MetaMask is your little Ethereum wallet that's embedded in your browser. If you haven't used it before, I recommend heading over to our website. This is all our free resources. We've got dozens of these now, guys. Take advantage of them. We had 100,000 unique visitors last month. So this is really getting some traffic now, and we're continuing to add to this. As I said, it's all free over there. Now, CoinMarketCap have launched /DeFi. So these are the momentum and the hype that builds when we see these little hidden gems. Hopefully we've researched a lot of these for you and got you into them really early before all this happens. Before the social media momentum, before CoinMarketCap adds the DeFi page. There's $2 billion that's gone into DeFi recently. I am certainly being a little bit cautious now, or starting to look for other projects that haven't pumped yet and haven't got the attention. So Augur will be launching their revamped predictions market next month. I think you will have to upgrade your rep tokens to version 2 there as well. So something to be mindful of if you hold rep. And these are the coins that are being added to all the exchanges. So FTX have added the DeFi basket, so you can trade the whole DeFi index. But I think one by one, they're getting people to vote on which coin they want to get added next. But I do think they're going to actually add all of these eventually. They're just getting a little bit of excitement going and letting people know that they have listed those coins there as well. Another non-Ethereum DeFi coin that has taken off lately is Haven. So look, people get confused. There was 3 Havens. There was one that fell off the radar a bit and got back on the straight and narrow when some new devs took over, which is this Haven. There was Synthetics, which rebranded from Haven to Synthetics as well. So that's where the confusion lies a little bit, I think. But well done to one of our senior members, Chris, who has been with us for a long time and a Nuggets News subscriber since the start, I believe. He's been posting about Haven since back in April, again in June, talking about this upcoming mainnet launch. And it did have most of the things that we look for, privacy, all the themes that I said were going to be big in 2020. Stablecoins, DeFi, and another 1,000% year-to-date gainer, or even more for the guys that were in it before these posts. So look, there's nothing better than when, I guess, we roll out our techniques and the way that we value things and invest in things, that checklist, the cheat sheet I spoke about at the start, and then other members are out there helping our, over 2,000 members now, helping them with their research. So fantastic to see. Well done, Chris. Okay, so we've got another hack. We need to talk about the risks in the DeFi world. We had 500,000 stolen from another balancer pool. The flash loans have been exploited again here. There's more DAI on Compound, a synthetic, than real DAI. So this is what starts to worry me when we've got people that borrow DAI, then they deposit it. And now you've got someone, just like in the gold market, that says that they own gold. And the guy that they lent it to says that he owns gold as well. So look, I haven't looked at the specifics here about whether or not this is actually involving a leverage, or whether or not you do need to have that over collateralized position so it doesn't put the system at risks. But these are the things that I get a bit nervous when I read those sort of things. And it's no wonder that insurer Nexus Mutual, so it's not an insurance fund, it provides mutual cover to these different contracts and a raft of projects. Eventually they want to start giving cover in the real world. They've been maxed out lately, so this was another one of the hidden gems I covered for you guys that is starting to get a lot of attention. They've been very busy and they've maxed out their insurance at the moment, their cover, because of how popular and how risky a lot of these DeFi yield farming stuff has become. Ravencoin, unfortunately, they did have a bit of an exploit. It looks like they've increased the supply by 1.5%. The hackers did. They didn't know that this was happening. The vulnerability resulted in the creation of an extra 5%. So look, that is something that needs to be fixed. Ravencoin has been underperforming, so maybe this is why. Maybe it has been sold on exchanges as they've got their hands on that. But that community does now have a decision about what they're going to do because of the extra supply. Kyber has mooned lately. So look, it says because of the DAO and because of staking, these are things that, again, I covered in detail for you guys, particularly back in October, that did a write-up about why Kyber is going to climb the ranks. Reminded me of synthetics before it went up 1,000%. They're adding a token burn. They're adding fees. The fees are increasing. Look, I was so bullish on Kyber, and sure enough, that Katalyst, once they announced that back in December in terms of adding staking and getting into the DeFi world, these are the sort of things that people just absolutely love. And that one's run from, I think it was 12 or 14 cents back here, up to $2. So again, it's another one that's well over 1,000% gain, depending on 2,000% if you got in. There's just nothing better than doing all your research and seeing this play out in front of us. So look, well done, guys. It was covered in the report as well back in November. So I just love it when we're all on a bit of a hot streak here. What I wanted to talk about next was these high gas fees. So people are asking me with things like, they're going to use an exchange or a contract, and sometimes they don't realize that it's doing multiple things at once. So this is a DEX aggregator called 1inch. When you go to buy a lot of tokens, let's say $20,000 of synthetics from this screenshot here, it goes and it gets that liquidity from a lot of other DEXs or protocols here. So it might take some from Kyber, some from Uniswap, and because that's multiple transactions, and each transaction might be $1 or $2 at the moment, some of these are costing, $10 to do. And this is where people are getting really confused and wondering why transactions are pending. So just something to be aware of. We've had record activity. Ethereum, the number of addresses, it's all heading in the right direction, but that has led to chain congestion. So hopefully we continue to see things like Bitfinex have moved their Tether transactions over to the Amisa Go, the Plasma network there. So awesome to see that OMG network is kicking goals. Scale is another scaling project that's launched on the Ethereum mainnet. I've probably named half a dozen of these before, but Vitalik's come out and very confidently said that Ethereum 2 scaling the data will be available before the scaling of general ETH computation. So they know that this is the priority. Look, we're already seeing the Ethereum at the moment capable of 2,000 or 3,000 transactions per second once the projects and protocols integrate these scaling solutions. So I think it's really easily going to get to 100,000 and then millions and billions of transactions per second over the next few years. We've had another open source ETH 2.0 beacon chain launch at the moment, multi-client testnet. It's now got an explorer as well, a blockchain explorer for you to check out. Guys, if these terms all confuse you, we've got a free glossary over on the website as well. This just shows you the issuance. So hopefully once we launch ETH 2, it's all finished. We're going to have a very flat, low, or even negative issuance of ETH. So the stock to flow models are going to make ETH very valuable there. And if you can't keep up with all this, look, don't forget every month we do our Ethereum episode. And we did do that last week with Anthony as well. In terms of all the different addresses and the sentiment data, they've been giving us some good heads up to combine with our fundamental analysis about these different tokens that have seen active addresses and you build a thesis around these different components coming together, and I think we have possibly topped for alts here in the short term, at least the ones that have pumped really hard. So look, yes, Ethereum addresses, I think Ethereum might actually have a bit of a run. It's been lagging compared to everything else. These are some more metrics that Sentiment's come out with in terms of active addresses versus price model to give us a feel for when things should be about to turn up, and we've just hit another green patch here. It's starting to turn green, so that is a positive sign for Bitcoin as well as ETH as well. Bitcoin and ETH are beginning to merge into the financial system. You guys should be sick of hearing me say that over the last few years. And these studies coming out that 1 million Brits have now bought some Bitcoin and ETH since last year. It's amazing to see the traction that it is starting to get. This is a really important metric. So when we see all these alts pumping of late, we did get the great heads up from sentiment, and members get access to some of their data and the reports we share as well. In March, it was very clear that these sort of top 20, 30 alts were getting the social media traction. Whereas now, you can't quite see that behind me, but Bitcoin and the top 10 alts are kind of where the focus is at the moment on social media. So I would be cautious about these lower cap projects. Finally, as we get into the Bitcoin news, I want to talk about tribalism. So we've seen a bug on the Bitcoin sidechain, the liquid sidechain, and some of the Bitcoin maximalists come out and say, look, this is no big deal. They just brush it off. Whereas they're constantly harping on DeFi or Ethereum whenever there's a bug or something going wrong. This was a vulnerability that had 1,800 Bitcoin at risk, and it was there for over a year, and they're just trying to play it down. At the same time, we've got Samsung Mao from Blockstream, and a lot of these other guys coming out with their own tokens now, and they're posting this on the Bitcoin subreddit. So none of this stuff would have been allowed if it was anyone else. But now that these tokens are on Bitcoin, or the bugs are on Bitcoin, do you see what I mean here about double standards? And that really frustrates me. As someone that loves Bitcoin and loves Ethereum and these other projects, I just think that this is going to come back and bite them on the bum here. So finally, we're getting some more businesses like BitPay adopt SegWit and integrate it for cheaper transactions because Bitcoin fees are so high. You can see that SegWit adoption here is still only around 50%, even though it's been activated for coming up on 3 years now. So this does actually improve Bitcoin's throughput by around 4-fold if everyone was to adopt it. But the hope is still Lightning Network. So we've got companies like Zap that are partnering up with Visa, their Strike product as well, to go back and forward from payments using the Lightning Network. These are the things that we're hoping to catch on, and that users don't even know if they're using Bitcoin or Lightning. Again, another bug that could create chaos, researchers have found. So look, so frustrating when we see the maximalists ripping on other projects when there's plenty of things going wrong still with Bitcoin and the Lightning Network. This was a positive story about how Bitcoin mining has really advanced the semiconductor space because of all the ASICs that are mining Bitcoin, all the research and money that's gone in there. And the big boys are getting behind this. So $5 billion worth of assets into a US-hosted Antminer S19s. I've been talking about this for the last few weeks, how this is becoming like a geopolitical battlefield, whoever can have the most hash rate. And Max Kaiser, who can be a little crazy at times, he is talking about this as well, saying the hash rate war with Iran could send Bitcoin to 500,000. So look, wouldn't that be nice? Either way, we spoke about the cost of mining and a lot of other metrics in this month's crypto mining update that was up this week as well. In terms of some funds, we've got $190 million Bitcoin fund that did finish its raising. We've got another ETP exchange-traded product launched by 21 Shares over in Europe, and Coinbase is going to custody the real Bitcoin that are backing this product. Bill Burr, so comedian, I wasn't aware of him, but I'm sure plenty of you are, particularly our US audience. Pomp did get him into Bitcoin. So look, these are just the one by one. This is becoming part of the everyday life for more and more people getting interested in Bitcoin. And let's not forget that Jeff Bezos, with his wealth, could buy all of Bitcoin, every Bitcoin out there if he really wanted to on paper. But in theory, you start pushing up the price, you're not going to get away with it. Let's just have a quick look here. I want to start with Bitcoin dominance. So it did break this uptrend. Look, if this is to recover, I'm just weighing this up in my mind, and I still see a scenario where possibly it can tread lower, but Bitcoin is going to run. Many alts can continue to outperform, but maybe it's the top 10 alts. Maybe it's not these DeFi alts that are down the list. Either way, I don't think that this is a head fake here. This is a pretty significant trend line, and I do think that if Bitcoin falls, with stock markets falling, I think alts would fall harder. So I don't really see a way for dominance just to to recover there. But that is one we're going to have to keep an eye on because there's a lot of interesting components at the moment. As I said before, in terms of the stock market, I think now the Fed have stopped buying, that we can roll over here. The line in the sand for stocks is the all-time high in the S&P 500. And for Bitcoin, it's that 10,000 mark, which we just keep butting into. So that is what I'm watching there. And this can be a perfectly simple bull flag on the weekly chart where we've gone up, we've consolidated, and we're about to absolutely rip higher because of all the money that's out there. Or the reality sort of hits home where we've got the second wave of COVID, business earnings dropping, the Fed realizes they've got to print more money, we have a leg down in the stock market. So look, I think the two are going to remain correlated. That's what all eyes are on at the moment, waiting to see what happens there. But I do think we have to, I guess, keep an open mind to the possibility that if stocks do roll over, I think Bitcoin's going with it, and it then becomes about, well, how much money is the Fed going to print? Is Trump going to come in and spend $1 trillion before the election? And all those things would be absolute rocket fuel for Bitcoin. So guys, that is it. That has been a long one again today. I hope you've enjoyed it. Head over to our website for all our free resources or to join our community. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.